Hello there, welcome to my channel. In this video, we want to look at a question from the question paper of November 2024, where we are going to look in particular uh, question 5 on that question paper, that is on the preparation of the production cost statement. So going to our question, yes, we are going to look at question 5, which is cost and management accountant of bricks and build CC in that table. So you need to just browse through the information that we have here before you attempt the question. And additional information you also need to go through. On the required part now, it reads prepare the production cost statement of bricks and build CC for the year ended at 31 December 2023. And our question is 21 marks. So I'm going to other section, you'd see that this is a production cost statement of bricks and build CC for the year ended 31 December 2023. So in our production cost statement, remember, we want to calculate the cost of production of finished goods. But we are going to start on direct material, whereby we are going to calculate raw materials used on the first section of the production cost statement. So the figure that we are going to start with here, we are going to have our direct material, show that we are going to have our calculation basing on the information of raw materials. So basically, that's what we have. So under direct material, we have opening stock should be the balance that should come here. Opening terminology you are given in the question. So it says that you are given details, and then you've got the balances 1 January 2023. So 1 January 2023, basically it's 01 2023. So we are going to have our opening balances. So on the first part, we want the which we are given as 650,000. So coming here, you would see that we have opening stock, or we can just say stock. That is on 01 2023. Then the balance that we have is 650,000, which we can put in the first column. And then from there, we are supposed to add, so we can just say plus purchases that we have in terms of purchases from suppliers, or we might write as material received from suppliers, depending on the information given in the question. So we are given it as material received from suppliers, whereby we got 1,640,000. So plus materials are received from suppliers. So you'll see that these material received from suppliers are also the purchases of direct material. So basically, that's what we've seen, that the figure that we have is 1,640,000. So we're saying 1,640,000. So if we have any carriages in terms of carriage on purchase of those of those materials, we are supposed to add them beneath there. So, but according to the question, we do not have any carriage on purchases. So from there, we are supposed to check if you've got returns of the material that has been received from suppliers. If we returned anything to the suppliers, we are supposed to subtract here. So you come here, you see that we've got material returned to suppliers, which is 170,200, which we are going to subtract here and say less material returned to suppliers. And then I would see the figure that we have for material returned, we've got 170,200. So they are saying less, so we can indicate it in brackets. Then if we subtract there, you're supposed to get your stock available for you. So we can just underline to calculate. So if we say 650,000 plus 1,640,000 minus 170,200, you get your stock available for use, which is 2,119,000. 1,800. Then from there, we are supposed to list our closing stock, which we can find in additional information. Closing inventory or closing stock, we are given it here as closing inventory, which we are given a 31 December 2023. And 31 December 2023 is 31 of 2023. And we are concerned about, so come here and say less closing stock, with 3. Then you get the figure that we got there was 650. So we subtract our closing. So after subtracting the figure that we are supposed to get, will come here as our raw materials are used. So if you say 2,119,800 minus 615,000, you get your 1,504,800. And we are saying this figure is raw materials used. So basically that's what we have. Then from there, we are supposed to add our direct labor to get our primary costs. So here we are supposed to have our direct labor. So we go back to our question, try to identify the direct labor. So if you come here, you'll see that we're given it as direct factor wages, which is 1,300,000. So you're saying 1,300,000. And then we add it to raw materials used to get our primary cost. So here we're saying 1,504,800 plus 1,300,000. You get a total of 2,804,800, which is going to be your primary costs. So this is what we have. Beneath that now, you are supposed to put your figure for manufacturing overheads recovered, which is the applied overhead. So we are saying manufacturing overheads are recovered, which we can get in the information. See that we're given it here. As it reads, manufacturing overheads recovered during the year 2,120,000. So we have got 2,120,000. Then from there, you are supposed to list all the manufacturing overheads beneath this. And obviously, after listing them, we compare the total of those manufacturing overheads with the manufacturing overheads recovered. Remember, this figure for manufacturing overheads recovered represents the applied overheads. Then you compare it to the actual that we are going to list here and get the total to determine if there's an over recovery or under recovery. So in this case, we go back to our list of balances to check all the manufacturing overheads that we have. So going down, we see that we have got the factor rent as the first one, which is 600,000. So we come here, we list them beneath there. Factor rent, which is 600,000. Then we check in terms of the next one. From factor rent, we've got salary and production manager, which is 820,200. 820,200. Then after we've got salary marketing manager, this one we adjust it in the profit and loss. So we skip it, material change, and then we've got depreciation. Here, which is depletion is 20% per annum according to the cost estimate. What our percentage is 20%, 3,210,000. Then we calculate 642,000. So here we are saying depreciation. And depreciation and the figure that we got 642,000. Then we check in terms of any other expense that we have. We also have a factory rates and taxes 230,200. Factory rates and taxes 230,200. Then we check in terms of the next manufacturing overheads. We also have insurance factory, which is 304,100. We have 304,100. We can just cross check this figure. 304,100. So we come here is 304,100. Then from there we can check if you still have any other manufacturing overheads. So from there we're supposed to add so that we get total actual overheads. So if we add from 600,000 to 304,100, we're going to get a total of 2,596,500. So this figure is the total actual overheads. So basically, this is what we have. So we are supposed to compare the manufacturing overheads recovered, which represents the applied overheads, to actual overheads. So in this case, we now see that the figure that we have for manufacturing overheads recovered is less than the actual overheads. In other words, applied overheads less than actual overheads. And when we have such a scenario, it's an under recovery. So we are supposed to add the difference here is add under recovered overheads. So the under recovered overheads, we are going to see 2,596,500 minus 2,120,000, and we show it as a negative here because we want this figure to be equal to this one. So for it to be equal to this one, so we calculate the difference and then we subtract it up from this figure to get our manufacturing overheads recovered. So if we subtract, you're going to see that you're going to get 476,000. 176,500, which you are going to show as a negative. So that's what we have there. And beneath that now we now have total cost of production. So we are now saying total costs of total cost of production, which we are going to get by saying 2 million of primary costs plus manufacturing overheads recovered. 2,804,800 plus 2,120,000. Then we get our total, which is going to be 4,924,800. Then from there, we are supposed to wait to add work in process at the beginning or opening work in process. Add work in process. and work in process. So if you refer back, you would see that work in process is here, which is at 01/01/2023, which is 290,000. So this is our opening. We have 290,000. So we are saying the date is 01/01/2023. And then we list our work in process at the end. Which is 31/4/2023. Then we check the figure that we have. We get it in additional information, which we are given here is work in process 170,000. So we are saying less, so we are subtracting. Then we can calculate, you get the final figure. So if you say 4,924,800 plus 290,000 minus 170,000, you're going to get your net figure is 5,044,000, 5,044,800. And this figure is going to be cost of production of finished goods. Cost of production of finished goods, and that becomes the last figure or value that we are calculating in our production cost statement. Of course, this cost of production of finished goods is supposed to be transferred to the trading account under the calculation of cost of sales. And we know that it has to replace the figure for purchases in a normal trading account that we know. So basically, this is what we have, guys, according to the question paper of November 2024 on the preparation of the production cost statement. So let's stay tuned for more videos to come. And let's not forget to subscribe and share to our channel. We'll meet again in the next video.